For decades, it felt like China's economy was just this unstoppable force, right? The engine that was pulling the whole world along. Well, lately, some serious cracks are starting to show. That bubble everyone's been talking about for years, it looks like it's finally actually bursting. So today, we're going to dig into what's really going on and, more importantly, what it means for the rest of us. But here's where it gets really confusing. On one hand, you've got the IMF, the International Monetary Fund, coming out and upgrading China's growth forecast. They're pointing to things like a solid export recovery. But then you look at the markets, and they're in a total panic. All the chatter is about a looming financial crisis, even a lost decade. That brutal period of stagnation Japan went through back in the 90s, after their own property bubble popped. So what gives? Is the economy rebounding, or is it collapsing? How can both of these things be happening at the same time? It's a real puzzle, and that's exactly what we're going to piece together today. All right, let's dive in. And our first clue starts with the Chinese consumer. So our first piece of the puzzle is the Chinese consumer. We're talking about 1.4 billion people. Their spending is supposed to be the main engine driving this massive economy. But lately, that engine is sputtering. And I mean badly. All right, let's look at November as a perfect example. This is when they have huge sales events, like Singles Day. It's like their Black Friday on steroids. So analysts were pretty optimistic. They were forecasting a pretty healthy 2.8% jump in retail sales. Seemed like a no-brainer, right? Well, the actual number came in and it was a total shocker. Sales only grew by 1.3%. That's less than half of what everyone was expecting. It was so bad, so alarmingly low, that some people were calling it a pandemic-level slump. We're talking numbers we haven't seen since the absolute worst days of the lockdowns. Oof. And look, this isn't just a one-off bad month. This points to a much deeper structural problem. You see, Chinese households are getting really worried. The government keeps shifting its policies, and that's creating a ton of uncertainty about what the future holds. And on top of that, you've got severe income inequality. It's actually even worse than in the US. A huge chunk of the population just doesn't have the extra cash to spend. So what happens? People are clamping down, saving their money like crazy, just bracing for whatever's coming next. Okay, so consumer spending is in the freezer. Let's move on to our second big clue. And this one, well, it's been an open secret for years. We're talking about the absolute meltdown of the real estate sector. And you have to remember, for the average Chinese family, property has been the #1 way to build wealth for decades. Wow, just look at these numbers. The thing that's so striking here is the sheer scale of the devastation. This isn't just one or two metrics looking bad. The entire sector is in a nosedive. New construction starts, down 20%. The money flowing into the sector, it's plunged by 11%. It's like from the moment they put the first shovel in the ground to the final handshake on a sale, every single part of this market is an absolute freefall. And for years, what's been the government's fix? Just pump more money into the system anytime it looks shaky. But that's kind of like giving a painkiller to someone who needs major heart surgery, right? It doesn't actually fix the deep structural disease. All that overbuilding, the mountains of debt, the fact that demand is just collapsing. And this cycle of failed quick fixes, well, that's exactly why Beijing is now being forced to completely rethink its entire game plan. Okay, so you've got consumers hiding their cash and the property market in a total freefall. Naturally, all eyes are on the government in Beijing. What are they going to do about all this? Well, if you look closely at what they've been saying and doing lately, you can see a huge shift in their thinking. So they have this super important annual economic meeting, right? The Central Economic Work Conference. And at the last one, they came out with this new slogan, promoting reform amid stability. Now, I know that sounds like pretty standard government speak, but trust me, what's hiding in those words is a massive, and I mean crucial shift in their entire approach. So here's the bottom line. For the first time, Beijing is basically admitting that their old playbook is broken. They're officially moving away from just chasing those big, flashy annual growth numbers no matter the cost. Instead, they're finally prioritizing the really painful long-term work of fixing the deep structural rot in the economy. It's basically a confession that things are so bad, they have to focus on curing the disease itself, not just popping more painkillers to manage the symptoms. Okay, so we've seen the deep cracks forming inside China's economy. But here's the thing. This isn't just China's problem. What happens there doesn't stay there. So what does this crisis actually mean for the rest of the world, for us? What are the ripple effects we all need to be watching out for?
China is now stuck between a rock and a hard place with its currency, the yuan. It's a classic economic trap. Look, they could make the yuan weaker. That would make all their exports cheaper and give them a boost on the global market. But the downside is that would crank up inflation at home and probably make the property crisis even worse. The other option? They could strengthen the yuan. That would really hurt their exporters for sure, but it could help calm things down at home by making imports cheaper. And this whole dilemma tells you everything you need to know about their new priorities. Because the government has pretty much signaled that fixing the mess at home is job number one, a lot of people are now betting that they'll be forced to go with a stronger yuan. Yeah, it would be a bitter pill for their exporters to swallow, but it might be the only medicine that can actually start to heal the wounds back home. And a decision like that would have huge implications for other countries. Let's just take South Korea as an example. Their currency, the won, is incredibly tied to the yuan. So think of it like this. On a scale from 0 to 1, where 1 means they move in perfect sync, the won and the yuan have a correlation of 0.7. That's super high. So what does that mean? It means if the yuan gets stronger, the won is almost certainly going to get dragged up with it, and that would create a world of pain for Korean exporters. And of course, South Korea is just one example of the many countries that would feel these shockwaves. Which brings us to the big final question. As China turns its focus inward, trying to wrestle its own economic demons, it might have to use its currency in a way it's never really had to before. If Beijing really does go for strong yuan policy to save its own skin, what kind of new instability is that going to unleash on the rest of us? Are we about to witness the first shots being fired in a whole new kind of currency war?